All right, welcome back, guys. It's been a while, and today I'm back, and today I'm just going to be talking about what you already know, and I'm going to start by looking at the euro dollar. This is just a price action study. I've got a lot of questions, uh, and the majority of them are traders who have difficulty trying to find reference points or trying to deal with the reference points that they have. How can I know? How can I identify that this is going to be the area that we're going to see the turnaround from and not the other area? And that has been a major problem. How can I tell that it's going to be here? That we're going to start seeing that price move. And well, there are many reasons why. And you don't start from the 5-minute time frame, you start from a higher time frame. And everything lines up there. And here's an idea. In a case where you are uncertain or you are scared of a particular price area, if you suspect that that particular price area is going to be the level that we're going to see that turnaround, but you are not very sure, here is one or two things that's going to happen. You could actually wait for that area to get a reaction and take the opportunities that build up from that reaction, or you could actually take that particular area. Now, for those of you who are scared, you could actually wait, because price does not just move in a straight line. We're not going to get price, or we're not going to see price moving in a straight line. All right, that hardly happens. Okay, it happens, but in a very short time, you're going to see price building a staircase-like type of structure. It does that all the time, and that's basically what you need to confirm your that you are actually correct in your idea and that you are in line with direction. Okay, so we're going to start looking at this from a higher time frame, and I'm going to break this down to a lower time frame. And as some of you may know, this right here is the trade that was taking today. So like I always say, you do not start from the 5-minute or the 15-minute. I'm going to start from here, because this is what you use to identify a direction or to tell a trend. Okay, I'm gonna take I take this out. Okay, we took out this particular high. I'm gonna highlight that. Okay, that was taking out, and I told you that we were going to see price, violate that equal high, or those equal highs, relative equal highs, and it would do it violently. And that happened. Now, what does that speak of? What does that tell you? Of course, it tells you that we will continue to see higher prices. So upon taking that out, I was expecting a reaction at this area, and I got that. Okay, but that was just a step to a continuation. Okay, now price reacted to this particular sponsored candle, or this particular, whatever you want to call it. So an AOC or your order block. Now price reacted to that area, traded fully into it, and then traded back down. And then it showed the unwillingness to trade lower. It reacted to the void that was created here, and it was rejecting that area. That was a very first sign. one of the things that I really, or that I would really like you to take note of is as soon as price trades into that area, okay, that you're looking for, that particular candle, you want to see it trade away from it really fast. But that doesn't happen here. It reacts quite all right. It does. But it fails to trade with speed in the opposite direction. So what happens? We start to see price trade back into the void that was created. It trades back up. That's a sign. It trades back into that candle again, trades back down, and boom, we saw price trading into it and above it. It violates it. Okay. Now this here has reacted, but it didn't react as you would want. It didn't react on a higher time frame or a long-term basis to give us lower prices. Okay. And there's a reason for that. And price trades higher violently. So we're still bullish. That's the case. That's the next area to look for would be here. So if that's the next area that we are looking out for, we expect price to trade higher. So let's come back to today's trading. Okay, let's come back to that and see how price reacted. Now, I'm going to mark that candle. Now, when we have identified this proportion here, we would now expect to see price trade higher. It has violated this. It reacted to it, didn't give us the velocity that we needed downwards. And there's a reason to that, okay? There's a reason for that. But let's assume that you don't know all of that and you're just looking at it, okay? And price trades very fast in here and violates that particular candle. What we would expect is we would be using this as a next area of concentration to look for a reaction to. So prior to that, it means that we're going to see price trade, but in there we have a void. In here we have your SC candle, okay, and or your sponsored candle. Price should trade back in here and trade higher, which it does. So let's go, and I'm going to go ahead and mark here. All right, that is the 27th right here. So we're in a new day now. So that's the 27th. Okay, we don't need to, we do not need. All right, I'm just gonna go now to the 15-minute, or I'm gonna go first to the 4-hour time frame. Now, the day's trading started somewhere around here. Okay, now, and so today's trading, or the 27th of April, it's right here. And prior to that, I want you to pay attention. We had seen these relative equals get taken out with this violent candle. Now, when we have a motive candle, okay, that tells us the direction of price on a larger scale or on a longer term scale, we use that to judge every other thing. So if you have seen the previous video that I did, is where I talked about the length or the duration of this particular candle, and I compared it to what we saw here, that would actually inform my idea on the direction of price. So now let's look at this violent move to the upside, and price trades lower. It trades lower again, creates relative equal highs right here, okay, and it trades back in here, creates a void, trades back into that void twice. It did that twice and traded higher. Now, I want you to look at this and look at the time it took. This took about 6, 7 candles, and you can already count more than 10 within here all the way to here. Okay, and look at all here. We have about 9 candles. Okay, 9 with price moving higher. Now you can actually look here and you find up to 9 because we're going to start to see price trade higher, but we could see the same behavior again. Now that gives you direction. Price reacts here. It trades back into this particular level and trades back higher. Okay, that should inform you bias for direction. And I'm going to move again to a lower time frame. I'm going to move to the 3-hour time frame, and here we are. Now, when you already know the intention, now you have reason. You have an SC candle right there. You have an SC candle, a sponsored candle right here. And that's basically it. That's the basis for your entry for a continued price move to the upside. Right there from the body of the candle, price trades higher, reacts, and continues to trade higher. Now, let's go and break this further down. I'm going to go to the 15-minute. Now, it came really close. If you come to the 15-minute, you will see some more candles. Okay. And if you have a problem with trying to pick your candle or your SC candle or your reference points, which reference points to pick and which ones to leave, I would advise that you wait for a reaction. Okay, there are certain things that you could do, but I would advise that you wait for a reaction. So start of the day, what time is this? Start of the day, right here. In price trades. And this is right here, London, 5 o'clock, New York time. And I was waiting for that particular reaction. It is, a lot of you saw I had an entry at this particular area and it didn't get filled. And so there was a reaction. Now, if you break this further down to a 5-minute time frame, you could see this high right here. Price trades into this level, breaks this high, and look right here. You may not see intention right there, but I want you to break this down into the 1-minute time frame. And maybe for those of you who still don't see it, this would act as the eye opener. So right here, that's what we're dealing with. I want you to look at these lows. Price trades lower, breaks that structure to the downside. Okay, that's a stop run for the London session right there. Now it took that out. Upon taking that out, it trades higher, takes this high. Now upon the return, you could actually look for a void within this area, or you look for what you know as the last candle responsible for this. That becomes your reference point. The last candle that was responsible for taking out these lows, okay, that becomes your point of call. And that becomes your point of interest. you can work within that. And what happened? Price traded higher and continue to trade higher. And so that is, or that was the idea behind the trade. Just breaking this down for those who have been asking. As time goes on, I'm going to be making more videos as to for those who have difficulties in picking the right reference points. But this is going to be short, and that's just it for today. And I'm going to make another video before the end of the week. So I hope to see you then.